All right, Candle Range Theory Trader, back with you for another video on showing you CRT price levels for more profit. So let's not waste time and get into it. What this video is going to cover is the indicator that you will need to identify these price levels, what you're looking for. We're going to set up a example chart on TradingView and show you some chart examples. So be sure to like and subscribe for more great content and videos. So this indicator that I'm going to show is used for all markets, stocks, cryptos, forex, futures, etc., etc. Now, the indicator that makes this system work is something that's called Mark Levels, and it is free on TradingView. While it shows various levels, monthly highs and lows, daily highs and lows, weekly highs and lows, both previous and current, also weekly open prices, daily open prices, and things of that nature. We won't need all of that. We're going to customize this to make this as clean and as simple as possible. So let's set up the indicator on TradingView, and then I'll reveal the examples to you to show you how to use these levels to help you make more profit. So we're on TradingView here now. We have our ATR indicator on here. Now, if you do not know about the ATR candle size indicator, what you're going to need to do is pause this video, go to the description of this video, and check out find out what is the ATR indicator. That will break all of this down. This explains why all of my candles are black except for this one and this yellow one and this blue one. But for those who do know, let's remember that our blue candle is a signal to go long and our yellow candle is a signal to go short. All right. So, but that's not really what this video is about for now. So what we're going to do is go to indicators, and I have it saved to my favorites, but you probably don't. But what you're going to look for is something that's called Mark Levels by Mark Tools. You can save that to your favorites if you'd like. And I'm sure it's not the only one that does this, but that's the one I like the most, so that's the one we get. So we put that on our chart. Now let me zoom in a little bit and we'll make this a little bigger. And now let's see what we need to do. So we click on our gear icon here. You don't really need equal highs. You don't need equal lows. You don't need sweeps. I like to make it dark right now. The default setting is black. I'm sorry, gray, but I like to make it the lettering at least as black as possible because otherwise it's just kind of hard to see. So let me see. Don't need to alert new sweeps. Let's see, display names, we can leave that there. Style, I think this is the one that makes it black here. We click that, and the opacity, pick that up to 100. See if that makes it kind of darker. All right, so here's what we need. Display names, we leave that on. The month, you can leave that on. Swept, you don't really need. You don't need the current. You don't need the daily open price. You don't really need to know swept. All you're going to need checked is the month, day, and the week, and then the previous month, previous day, previous week, and that's it. Okay, so when you finish, you're trying, depending on how you want to trade this as well, you can take off. If you don't want to trade monthly levels, you can take that off. If you don't want to take, if you don't want to trade daily levels, you can take that off if you want to focus on the monthly chart. But I'm going to show both just for the sake of this video. So we click OK. And when you finish, you should have PWH, which stands for prior week high, PDH, which stands for prior day high, PDL, which stands for prior day low, and PWL, which stands for prior week low. These are going to be our key levels to look for ranges that we could take trades off of. This is the daily chart, okay? So that's how you're going to set up your chart with marked levels. If you get confused about that, just rewind it, take a look at that. But you should only have 4 lines on your chart when you finish. Prior week high, prior week low, prior day low, prior week low. That's it. Okay, that is all. That's everything. Okay, that's how you set up your chart. So here is our decision flow. Okay, so what do we look for? We have these levels marked. Okay, so how do we look for trades to take based on the candle range theory? Okay, and if you don't know what the candle range theory is, you need to pause this video, take a look at the description for the video describing what is the candle range theory, and I'll break it all down for you. So the first thing we look for is there an ATR candle on the daily or weekly chart? Okay, so the ATR candle, once again, if you're not sure what that is, pause the video, take a look at the chart that says what is the ATR indicator, ATR candle indicator, and it'll explain it. But what you're looking for is a daily candle, okay? A daily candle that is yellow or blue or whatever you personalize your colors to be for going long and short. So for instance, the one that, since this is a daily chart, this would be an opportunity. This would be an opportunity, and I'll show you like one more. This is a live chart. One I'm looking at actually even right now is say CAD yen. So this could be an opportunity possibly, or Aussie yen. This could be an opportunity back here, even though it's a few days ago. This is back from December 19th, but we're waiting to see what that's going to do. But we're just monitoring these candle ranges, the high of the day and the low of the day of an ATR candle. So just to go back to EU to make this simple, we're not looking at every single, we're not looking at the high and low of every single day. I mean, you can trade that if you want, but the reason we want ATR candle high and lows is that it increases our probability of a reversal off of the high or off of the low. Okay, and I'll show you a quick example of that really quickly, and then we'll keep going with the video. On dollar CAD, this is actually a real trade that I took right here. So you'll see here this daily high on this yellow and this daily low. Remember, when it's yellow, at least for the sake of this video, that's our key to go short. So that would have been our candle range high right here. Okay, candle range high, and you see it pokes above it, close below it, and then it pokes above it one more time, and then it tanked. Okay, this tanked 170 pips. Okay, that was technically yesterday, but this is what we're going to be focusing on: the high and low of daily ATR candles or weekly ATR candles as well. I don't see any on here, but now the higher the time frame, the less likely it is to appear. Able to see here a blue price pokes below it, and then it comes up for the next 1, 2, 3 weeks, something like that, just to keep it simple. Okay, but that's our range. You wait for this to clear out all of everybody who went long there, and then it goes up like that. All right, so let's go back to our decision flow here. So if there is a ATR candle on the daily or weekly chart, we continue. If no, there's no trade. But let's say we do see one. The next thing we're looking for is a money candle. All right, what is a money candle? Again, if you don't know, you need to go back, take a look at that video that describes what is the candle range theory, and I'll go over what a money candle is. So it does rate that prior month or week or days high or low, one of those key levels. And here's something that you can also keep in mind. The rate or the money candle can be on a lower time frame. And this is how, these are the time frames. If you are trading a monthly range, so let's go back real quick. If you are trading a monthly range like this right here, this is the monthly range, then your money candle can be, according to our chart, a weekly money candle. All right, so you'll drop down to that lower time frame. All right, so I'm on the weekly now, not on the monthly, but if you had a monthly money candle, that's like really rare. But let's take a look at that real quick, just for the sake of the video. Like I said, now that's past few months, you've only had one right here. This was July. So for the month of July, you had a long example, right? So let's mark that really quickly right here. Because when it's blue, we're interested in going long. So that's our candle range low. And then when we drop down to a weekly time frame, we're looking for a money candle that reaches above the level that we were at. So it sweeps below, closes above, which is pretty much, you could say this one right here, more or less, right there. And then it goes up the next, like I said, 1, 2, 3 weeks. But that's from the monthly chart to the weekly. So that's really for swing traders and not day traders. I'm not a swing trader, but if you were, this is something for people that work a lot, don't have a lot of time to check the charts. You know, you can hold on to a 3-week trade, that's fine. Buying at the close, the open of this week would have got you, on a perfect example, 351 pips. 351 pips over 3 weeks. So, you know, yeah, $10 a pip, that's $3 grand. That's not bad, but it's up to you. All right, so Monthly range, weekly candle, which is what I just showed you. If you're dealing with a weekly range, you're looking for a daily money candle. So let's see if we can find one of those real quick. I'll go to another pair. We'll go to, let's go just try Euro New Zealand just for the heck of it. So again, we're looking for the weekly range. So we go to our weekly chart. Here's one. Let's see. This may or may not be one. I'm doing this on the fly before I get into the examples. So we'll take a look at this one. Candle range high, right? And then even though there's a clear one right here, we're going to drop down to the daily to see if there's a day that poked above it and then closed below this weekly range here. Go back. And yep, the money candle is this one right here. I'll put an arrow on it to make it real simple to see. This one, okay, goes above, closes below. This is a whole day, all right? Once this day appears, here's your trading day right here. This is August 5th on Euro New Zealand. This is the daily chart. This is the money candle. This is the trading day. We enter. Okay, and then you get, let's see, to that low, to the most stark low is 375 pips. That took place over 1, 2, 3, about 4 days or so. Okay, so these can give big moves. At the same time, they take a while to develop. But the trick is you have to wait for all of this sweep here. Some people call it, if you're familiar with ICT concepts, he calls it a sweep of liquidity, whatever you want to call it. You know, that's fine. You have to wait for that to be done before you start trading. Okay, I call it a money candle, but it really doesn't matter. Same thing. Okay, once this price action gets cleared out, you start dealing in here. You let all these stops get ran before you start dealing, and then all that's yours. But again, that's a part of a identifying the range first. What's the most important thing? Identifying an ATR range, and then you get the point. So the same thing if it's a daily. Okay, a daily range, that should be range. Okay, if it's a daily range, you're looking for a 4-hour, you drop down to the 4-hour to find that. Okay, so you get the point. Same thing, except find a day, ATR candle. You know what, we'll go ahead. We did the rest of them, so why not? Let me clear this. And the mark levels, even though I'm not showing the mark levels, I'll pull them up in a second on a replay and show you that. And it's going to automate the fact that it's going to show you what the prior day high and low is. But this is the high. This is a daily high. This will be considered a daily low, right? So now let's go to, this is August 13th. So I'm going to do the 4-hour. Let's go to August 13th. We're going to use the replay feature. Okay. Here. All right. So there we go. So here's our ATR candle right here. Okay. Daily high, daily low. We've already identified that. See, mark levels has PDL, prior day low. Let's go forward a little bit. All right. And then there's our money candle right here. Okay. So on the open of this candle here at 1 a.m. Eastern Standard Time might be an ideal entry. So let's say if we just took an entry in here, we're going to just let this play out. And you got to mark the levels because now it's showing this as the prior day high right here, but we're trading off of this daily high right here because these mark levels are going to update every single day. But this was our money. Let me put an arrow on the money candle. Money candle is here, right there. Okay. And really got 3, 1, 2, 3. They give you this one or this one, equal highs sometimes play out either way, but that's the better one. Swept above the candle range and then close back inside it. That's your signal to go ahead and start going to take the reversal. And then it just plays out, you know, and there you go. So that was good for 289 pips. Okay. All right. So there you go. Again, at like $10 a pip, that's $2 grand. not over 2 grand. So it's not bad. It's not a bad way to make a living. All right, so let's get out of this and let's just finish up the decision flow here. So I've showed you how to go from the monthly to the weekly, from the weekly to the daily, and what we just went over was daily dropping down to the 4 hour. So you just take your entry at the best level, set your stop loss, and you can do your take profit at the middle of the range or at the bottom or top of the range that you're trading. So here's another weekly chart example, just some screenshots. This is pound Swiss. This is a weekly chart, okay? This is our range. ATR comes first. That is the bedrock of this. Okay, the money candle is the most important candle, but if it's not yellow or blue, I'm not interested. Okay, that's where it starts. Candles first can't. My ranges have to be exceeding of the ATR. Otherwise, I'm not interested in it. All right. So this was September 16th of 2024. If you want to look at it, ATR weekly range. So we frame our range. Okay, mark level is going to keep those prior week high and low there as long as the current week is still active. The money candle comes on the daily chart. So now we drop down to a daily, like our decision flow shows right here. If we're dealing with a monthly range, weekly range, we drop down to a daily candle. This was a weekly. I didn't do a monthly, okay, but I just showed you that. This is just a weekly. Okay, so again, start with the weekly chart, then drop down to the daily to find when to enter. As far as times, you want to enter near the end of the session, like 4:30, 4:45 Eastern Standard Time, near the end of the day. All right, so that's the money candle right here on the 23rd. As long as the level isn't broken by 20 to 25 pips, and when I say level, I'm talking about the candle range high. So price can come back up a little bit, but as long as it's not broken by 20 to 25 pips, you should be good. The trade should be valid because that's what it did here. But if you measure from the close, if you see where my cursor is, this red line to the close of this, it was like, I think if memory serves, it was like 15 or 16 pips. Trade is still okay. That's not a breakout of the range. That's just to induce more longs. All right, but it does take a few days to develop. So you could have gotten in anywhere. You could have gotten a decent short position on Tuesday, Wednesday, or Thursday, and then after that, boom, Friday. This blue candle here shifts everything down. Everybody who went long here got destroyed in one fell swoop, and the profit target finally hit the. It barely missed the bottom of the range, but this is the important part of not being too greedy. Take what you can get. Even if the day ended like this and you get out around the middle of the range, that's better than being stopped out. All right. So take profit though, it hit October 3rd. And then here's a daily chart example. Remember, for daily charts, if we go back to our decision flow, if you're looking at a daily range, your money candle should be on the 4-hour chart. All right, so let's remember that. So if we start with our daily range, this blue candle here is our range. So we're looking to go long. Once we find our money candle on the 4-hour chart, when we drop down to a 4-hour chart, here is that right here. There's the money candle, below the range, close back inside of it. Entry could be on the open of this next candle. Boom, pops up. That was at 9 p.m. All right, that's the ideal time. And then take profit did play out later on, so you had to sit through all of this. It hit the middle of the range very quickly. Price did come back down, but notice these little pins to the bottom of the range. It still didn't break the range and then took off. So either one of these would have been fine. You could have got out at the middle of the range, or if you wanted the whole thing ran up about 125 pips. Half of that, was that, like 70, 65? I'm not a big math person, but whatever half of 125 is, that was the halfway part of this range as well. Take profit hit Tuesday, November 5th. So as long as the range holds, the trade is still valid. So don't let the retraces scare you. So in conclusion, using the ATR candle size indicator and mark levels can help you find ranges that are easier to see. Okay, it just automates the process. It's going to keep the plan very simple. Okay, don't add a whole bunch of indicators. You really don't need them. I don't really call this an indicator. It's just a way to identify key levels: monthly highs and lows, daily highs and lows, weekly highs and lows. If you trade those, you can be good. But remember always, the higher the time frame, the longer the trade is going to take to play out. That's why I prefer 4-hour ranges or daily ranges. Weekly ranges, I'm not a swing trader, so I don't really have the patience for a weekly or a monthly range. Okay. And that's that. So, but daily, weekly, or monthly levels are all you're looking at. Be sure to stay in good trades. Don't let the retracement, like this one here, don't let this price action right here scare you out. Okay. Don't let this happen. Don't let this stuff here scare you out. You're still good. If you took this entry here, comes up, It may come back down and scare you, but this is anyone who's been trading a while. Just know this is a W. Leg one, leg two. Second leg W is one of the safest trades to take. Sometimes it's called a double bottom, or sometimes you may have a triple bottom. Same thing, potato, potato. All right. So, lastly, be sure to manage risk and know your margin. And there's no need to scale in. No need to scale in using this method. If you make your first entry your best entry and know your margin, and if you're unclear on that, take a look at how to make $1,000 a week. I'll put that video in the description as well, so you get a better understanding as margin on a high leverage broker. Okay, so check all that out. And yeah, make your first entry your best one, because the thing is, when you scale in, let's say if you scale in right here on this leg, and then this comes back, depending on your margin, you might blow your account on this retrace. So I like just taking one entry, and if I get one entry worth $5 a pip, and I get 100 pips, that's 500 bucks. I can live with that. All right, but it's got to start somewhere. So that's that, and I definitely appreciate you watching. Don't forget to like and subscribe. Be sure to leave a comment, connect with other traders who are using this method, help each other out. Any questions you want to leave them as well, I'll be sure to get to you as soon as I can. Thank you for your time and attention, and have a great rest of your day. Don't forget to hit that subscribe button, and we'll see you on the next video.